Hello everyone, welcome back to my channel Medasvi Commerce Classes. So in the previous videos and all we were discussing about the dissolution. Hope you people have understood and you are following the problems, dissolution problems. Today I have taken up with the problem which is very important adjustment we are going to deal with today's problem, that is realization expenses paid by the partner. If any partner has paid the realization expenses, how you have to treat it. So in the previous problems the realization expenses were paid by the firm. Now the partner is paying the expenses. How will be the treatment of this adjustment, as well as any partner have taken over the liability, how you have to treat it. These two are the major aspects which we are going to discuss in today's class. So before we move on to the problem, if you people have not subscribed to my channel, please do subscribe to my channel Medasvi Commerce Classes. Like and also share with your friends. So without much delay, we'll move on to today's problem. The problem is like this. Arish and Suresh are partners. Yeah, there are two partners, Arish and Suresh, in a firm sharing profits and losses equally. As we all know that equally is nothing but 1:1. They are sharing equally. They agreed to dissolve the firm on the date 31st/3/24. On this date, they have given the balance sheet. We have creditors, bills payable, Suresh loan reserve fund, and so and so. And we have assets also. But very importantly, we have PBD also here. Yes, that is important because PBD is only the item which will come to the creditor side of your realization account in your asset side. Okay, coming to the next one. They have given few adjustments over here. I hope you people can see. On the above date, the firm was dissolved. The following information is available. So, for how much price you have sold the asset, they have given here. And the creditors are taken over by the Arish. Arish took over the creditors. I told you very importantly, if any partner have taken over the liabilities, what you are supposed to do. Until this problem we are discussing with any partner has taken over the asset, what you are going to do. You can ask me, ma'am, liabilities is nothing but the debt what we have to pay. How can a partner can take over this liability? In the sense, partner has agreed that instead of you paying the money to the Arish, I'll only pay the money to Arish. I'll only pay the money to that particular creditors. So that's why the partner Arish has took over the creditors. So this money will be paid by the remaining partner or paid by the firm to the Arish in his partner's capital account. Okay. Now bills payable were paid at 5% discount. Suresh paid the realization expenses. Who paid the realization expenses? Suresh paid the realization expenses. Actually the expenses was rupees 1000. This is the real expenses of the realization, and he was to get a remuneration of 2000 for completing the process. So he has paid the realization expenses and he has taken over all the things. No, for this we are paying him the remuneration of rupees 2000. So this is the important adjustment which we are going to discuss in today's video. Okay, very important. And again they have asked you to prepare the realization account, partner's capital account and bank account. Yes, we do follow the steps in the realization account. First, we will record all the assets to the debit side of the realization except your cash in hand, cash at bank, P&L account as well as PBD or RBD which is given. Okay, fine. We will just move on to recording all the assets one by one in the debit side of your realization account. Okay, we will start with that. 2. First, cash at bank should not be recorded. We will just mark it. Cash at bank should not be recorded. Bills receivable, yes. Stock, yes. Debtors, we have to take the inner column. PBD, don't record it because it will go to the credit side. Building, yes. Machinery, yes. We'll record one by one. 2. Bills receivable. Take it to the outer column. What is the amount of bills receivable? 5000. Next, 2. Stock. Stock, what is the stock amount? 18,000. Next, 2. Debtors. Debtors take the inner column. Debtors take the inner column. Amount is 25,000. Next, building. 2. Building. Building we have taken 23,000. 2. Machinery. Machinery we have taken 38,000. Okay, so now we have completed with all the assets. Before going to the second step, recording the liability, you people just record the PBD or else you'll forget it. We'll take it to the credit side by PBD. How much it is? That is PBD is 3000, I think so. Yeah, it is 3000. We'll take 3000 over here. Now, first step is completed. We'll move on to the second step. What is the second step? Record all the external liabilities to the credit side of your realization account except general reserve, reserve fund, P&L, partners loan and capital. Okay, we'll see what and all things to be recorded. Yes, creditors to be recorded, bills payable. Yes, Suresh. Suresh is a partner. Yes, Suresh is a partner. So he will become a partner. Partner's loan should not be recorded. Reserve fund should not be recorded. Capitals should not be recorded. Only you have to record creditors and bills payable. Now we will move on to creditors and bills payable. Okay, first we will take the creditors. By creditors. Creditors how much amount? Creditors is 25,000. We'll take 25,000 directly to the outer column. 25,000. Next we have bills payable by bills payable. Bills payable, how much is the amount? Bills payable 10,000. So we'll take 10,000 over here. Bills payable 10,000. So completed with the second step also. Yes. Now we'll move on to the third step. What is the third step? Do you remember? Sell all the assets in the credit side by seeing the adjustment. Whatever the assets we have recorded here, by seeing the adjustment, you have to sell all the assets to the credit side of your realization account. See here, you can observe we have cash at bank. If you have cash at bank, you should write it as by bank account. We'll write it as by bank account. By bank account. How much it is amount? We'll go with one by one. First one, stock. You can see it over here. Stock, we have sold it for 25,000. Take it to the inner column. Stock, 25,000. Next we have debtors. You can see with the adjustments here. Debtors we have sold for. Debtors we have sold for how much? 20,000. Next we have bills receivable given here. Bills receivable is for 4,000. Machinery is for 33,000. Bills receivable. Bills receivable 4,000. Machinery 33,000. Okay, year completed. We'll check once whether we have recorded all the assets or not. So bills receivable, yes, we have sold. Stock we have sold. Debtors we have sold. Building, no, we have not sold. Machinery we have sold. Now you check buildings, any partner have taken over, whether it has been given in the adjustments or not. We'll just go through with that. See here, buildings, any adjustment they have given? No, buildings adjustment is not given. Then what you are supposed to do? You have to sell the buildings at the book value only. So we'll sell the buildings. Buildings, how much is the book value? Book value is 23,000. We'll sell it for 23,000. Okay. Now that's all. We'll just total it and take it to the outer column. Total which comes to 1,05,000. So we'll take it and we'll total it and take it to the outer column. 1,05,000. Now after this, come to the liability side. We have completed with the assets. Entire assets we have sold. No partner is taking over any of the asset. So third step is completed. Now pay all the liabilities in the debit side. We'll pay the liabilities one by one. In the debit side, we'll write it as to bank account. To bank account. Right below that, we have only creditors and bills payable. PBD should not be sold. Only creditors and bills payable. But creditors were taken over by Arish. Arish is taking over the creditors. Don't pay it. And bills payable were paid by the firm at 5% discount. So we'll record the bills payable. bills payable, in the bracket it is 5% discount. So what is the bills payable value? 10,000. 10,000 minus 5%. 10,000 minus 5%, which comes to 9,500. See, you can ask me, ma'am, why you are taking it in the second column? Because here we have only one item, no? That's why we are taking it to the second column. All the bank items I am highlighting here itself because it will be easy for us to do with the bank account. So now we have completed with the these two, but creditors was taken over by, who took over the creditors? Harish. So we'll record it separately below that. When any partner is taking over any of the asset or liability, you have to write the name of the partner's account. To Harish capital account. Harish capital account. Below in the bracket, we'll just mention it as creditors taken over. Creditors taken over. So for how much they have took over the creditors? Yes, took over the creditors for rupees. Book value. Book value they have given. Book value in the sense exactly this 25,000. 25,000 you have to write it here. Hope you people got it right. All the 4 steps we have completed. Now come to the last step. What is the last step? Pay the realization or dissolution expenses in the debit side. Usually when any partner was paying, we used to, any firm is paying, we used to write it as to bank account. But now in this problem, listen carefully, Suresh is paying the realization expense. So you should write it as to Suresh capital account. To Suresh capital account. To Suresh capital account. In the bracket, we'll just mention it as realization expenses. But one thing, please keep it in your mind, everyone, when you get like this, what is the actual realization expenses? That should not be recorded. What is the remuneration you are giving? That should be taken into consideration. Keep it in your mind. How much remuneration you are paying? 2,000. So 2,000 you have to record it here. 2,000. Got it, everyone? Any doubt? No. Now we will check which side it is more and we'll then close with the realization account. This side you have got 1,43,000. I'll just write it here. 1,43,000. Okay, this side you have got 1,45,500. 1,45,500. Okay, you just check which side it is more. Obviously your debit side is more here. So that same amount we'll record it on both the sides. 1,45,500. Here also 1,45,500. Okay. Now from this, yes, as you all know that if debit side is more, then it is a loss. If debit side is more, then it is a loss. Okay. Now we have loss that will be distributed to here by loss transferred. Loss transferred to who are the partners? First we'll calculate the loss. 1,45,500 minus 1,43,000, which comes to what is the loss we have incurred? That is 2,500 rupees. Now this 2,500 will be transferred to these people. Will be transferred to, first person is Harish. They are sharing equally, right? So Harish equals 2,500 into 1 by which comes to 1250. Suresh equals 2500 into 1 by 2. Again, which comes to 1250. Now we have completed with the realization account. We will directly go to the partner's capital account. In the partner's capital account, first we will record the capitals of the partner in the credit side by balance brought down. What are the capitals of the partner? We'll just have a look of it. Capitals of the partner is Arish 40,000, Suresh 30,000. We'll take it to the debit side. Arish 40,000, Suresh 30,000. Now after this, whether the profit or loss which is earned or incurred in a realization account, that should be taken. Here we have a loss. Loss is written in the credit side, so that will come to the debit side. To realization account. To realization account, in the bracket we'll just mention it as loss. So how much loss? Harish has to pay 1250. Suresh has to pay 1250. Now after this, you check whether any general reserve or reserve fund is given in the problem. Yes, you have reserve fund here 5000. That should be distributed among the partners equally because they are sharing the profits and losses equally. It will go to credit side by reserve fund. Reserve fund, it is 5000. So we'll just take it in the bracket 5000. Comma, that you have to share it in 1:1 ratio. So when you share it, it will come to 2500. 2500. Reserve fund is completed. Check any P&L account is given in the problem. Here you don't have any P&L account in any side of your balance sheet. So leave that P&L account. Now next, any partner have taken any assets or liabilities? Yes, we all know that the Arish has taken the creditors, that is the liability was taken over. See, this is recorded in the debit side, so it will come to the credit side by realization expenses, by realization account. In the bracket, only one item is there, no, so I am writing it as directly creditors taken over. Who took over creditors? Creditors were taken over by Arish. For how much price he took over creditors? He took over it for 25,000. You can see it over here. So Arish 25,000, we'll record it in the Arish column. And then you can observe here we are not paying, the firm is not paying the realization expenses, but who is paying? Suresh is paying the realization expenses. So we have recorded as Suresh capital account. In which side we have recorded? Debit side. So that will go to here in the credit side by realization account. By realization account, realization expenses. Realization expenses, you just record it in the Suresh column. How much we are paying? We are paying 2000. You have to take entire 2000. You got my point. See, in the realization account, wherever we used to write the name of the person, that is capital, that thing will go to the partner's capital account. Now that's all, we have recorded everything. Now we'll just total it and we'll just balance it. We'll check, obviously, if we can see this side total is only more, which comes to, here it is of 67,500. 67,500. Here it is of 34,500. 34,500. We'll take this on both the sides of your realization account. Partner's capital account. Now from this we'll minus this 67,500 minus 1,250, which comes to 66,250. And when we minus 34,500 from 1,250, 33,250. So this one we'll write it as to bank account. To bank account in the bracket B bar F. B bar F stands for balancing figure. So now we have got the amount 66,250 and 33,250. Hence it is a bank account. We'll just highlight it. It will be easy for you people to refer it. Okay, now come here in the bank account. First we will record the balance brought down. To balance brought down. This will be given in your balance sheet, that is in the cash at bank. How much is the amount? 14,000. We'll take that 14,000 here. Now, after recording this, first you go with the realization account. Where and all you written the bank, in the opposite side you have to record it. In the debit side you have written the bank here. Here it is in the debit side, it will go to the credit side. Amount is 9,500. We'll take it here in the credit side. In the bracket, liabilities paid. How much is that one? 9,500. Next you can see, you can check wherever you have bank account. Here you have bank account in the credit side, that is 1,05,000. So it will come to the debit side of your bank account. To realization account, in the bracket, assets realized, so which comes to 1,05,000. 1,05,000. Afterwards, after writing, keep it in your mind, after writing the realization account, next any partner's loan is there, you just check. Yes, you can see it over here, we have Suresh loan. Suresh loan should be taken to the credit side of your bank account. First take the Suresh loan. By Suresh loan account. How much is the amount? 10,000. Next, after writing this, now come to the partner's capital. Here you have two, that is Arish amount and Suresh amount. We'll record one by one. By Arish capital account. By Arish capital account. That is, amount is how much? 66,250. By Suresh capital account. Suresh capital account, the amount comes to 33,250. Yes, right, it is 66,250, 33,250. Now completed everything, we'll just check it. What will be the total? Here it is 1,19,000. We'll just write it, 1,19,000. Come to this side, we'll just go and check whether it got tally or not. Yes, it is 1,19,000 again, 1,19,000. Hope you people understood. Any doubt you people are having, if you have any doubt, you put it in a comment. I will just clarify those doubts in my next video. Keep it in your mind. This is very, very important. Realization expenses. If it is paid by the partner, you have to write it as to partner's capital account and write the amount of remuneration. Write the amount of remuneration. And also once again, it will go to the partner's capital account. It will go to the partner's capital account and record it in his column in the credit side. When it is paid by the firm, here bank account, it will go to bank account. When paid by the partner, here partner's capital account, it will go to partner's capital account. Anyway, it comes to the opposite side of the accounts. Hope you people have understood this adjustment. Very, very important. Please prepare with that adjustment. We'll come up with the next video with another one, complicated adjustment. Until that, stay tuned to my channel. Bye-bye.